Do you ever feel like investing is a secret club and you're not on the list? Like it's a language you don't speak, a game with rules too complicated for the rest of us? If you're feeling stuck or even scared about your financial future, I'm telling you right now, I'm about to fix that. What if I told you that a few simple, cheap strategies could get you started on building real wealth, even with a tiny bit of money? In this video, I'm going to show you exactly how. The turn, it doesn't have to be this way. For years we've been told a complete lie, the lie of the Wall Street guy in a suit, screaming into a phone. It's a picture designed to make us think, nope, that's not for me. It tricks us into believing we need a fancy degree and a giant pile of cash just to start. But that is just not true anymore. Today, the most powerful tool for building wealth isn't some secret stock tip, it's consistency. Think of it like the story of the tortoise and the hare. The hare is the gambler, trying to time the market, making big bets, and sprinting ahead only to get scared and stop. The tortoise is the person who invests just $50 or $100 every single month. They just keep moving, slow and steady. The tortoise is almost guaranteed to win the race. This isn't about being the richest person at the starting line, it's about being the most disciplined person in the race. You don't need to be rich to start investing. You invest to get rich. I want you to imagine a tiny snowball at the top of a massive hill. You give it a little push and it starts rolling. At first it's not much, but as it keeps rolling it picks up more snow, and the bigger it gets, the faster it gets bigger. Before you know it, that tiny snowball has become an unstoppable avalanche of cash. That's compound interest. It's the interest you earn on your original money, plus the interest you earn on your interest. It is a literal snowball effect that can turn small, regular investments into a giant pile of money over time. Let's do a quick example. Imagine you invest $100. Let's pretend you get a 10% return each year, which is close to the S&P 500's historical average, but it's never guaranteed. After 1 year, you'd have $110. The next year, you don't just earn interest on your first $100, you earn it on the full $110, so you make $11, and now you have $121. It feels small at first, but after 30 or 40 years, the growth becomes absolutely insane. The only thing you need is time, and the sooner you start, the bigger that hill is for your snowball to roll down. The what? Your simple investment toolkit. Okay, you get why you need to invest, but what do you actually buy? This is where everyone gets confused, but it's so much simpler than you think. Let's break it down. A stock is just a tiny piece of a single company. It's like owning one specific type of fruit in a giant supermarket, let's say just the bananas. But picking one stock is super risky. If the banana crop fails, you've lost everything. So how do we make this safer? The answer: index funds and ETFs. These are a beginner's ultimate weapon. Instead of just buying the bananas, you buy a shopping cart fund that contains a small piece of every single item in the entire supermarket. That's an S&P 500 index fund. It's one single investment that owns a piece of the 500 biggest companies in the US. The magic is instant diversification. You're not betting on bananas, you're betting on the entire supermarket to succeed. And they are insanely cheap. Funds like the Vanguard S&P 500 ETF, VOO, or Schwab S&P 500 Index Fund, SWPPX, have fees as low as 0.03% or even 0.02%. Think of fees like a tiny leak in your boat. A high fee is a big hole, sinking your returns. These funds have a leak that's barely a drip, meaning more of your money stays in your boat, working for you. Want another brain-dead simple way to diversify? REITs, or real estate investment trusts. Think of it like buying a slice of a giant pizza made of office buildings and apartments. You don't have to bake the pizza or deal with the tenants, but you still get a share of the profits every time someone pays rent. It's that simple. You don't need to be a genius. You just need to buy the whole supermarket for cheap and let it grow. The how, your step-by-step action plan. This is it. We're turning talk into action. Here's your 5-step plan to becoming an investor. Step 1. Clear the tutorial level. Before you invest a single dollar, you need a safe zone. In a video game, you wouldn't fight the final boss without any health potions. That's your emergency fund, 3 to 6 months of expenses. and high-interest debt like credit cards. That's a monster that drains your health every second. There's no point in earning 10% in the market if you're paying 22% on your credit card. Beat that boss battle first. Step 2. Choose your player. You have a few incredible options. If your job offers a 401k with a match, start there. The company match is like a power-up in a game that instantly doubles your score. It's literally free money. If they match 3% of your salary, you just made a 100% return instantly. You can't beat that. If you don't have a 401k, or you're already getting the full match, you open a Roth IRA. A Roth IRA is the God-tier account. It's like a treasure chest where all the gold inside multiplies, and when you finally open it in retirement, the king doesn't take any of it in taxes. For 2026, you can contribute up to $7,500 if you're under 50. But there are income limits to contribute the full amount. For single people, your income needs to be under $153,000, and for married couples, it's under $242,000. Step 3. Open your account. This sounds hard, but it's as easy as signing up for Netflix. You can open a Roth IRA online in 15 minutes at a brokerage like Vanguard, Fidelity, or Charles Schwab. Most have zero minimums to start. You just enter your info, link your bank, and you are in. Step 4. The easiest strategy ever, dollar cost averaging. Forget trying to time the market. It's a game for losers. Instead, we use a crazy powerful strategy called dollar cost averaging. Think of it like buying groceries. You don't wait for the perfect day when milk might be cheapest, you just buy it every week. It's the same here. You invest the same amount of money on the same day every month, like $100 every first of the month, no matter what. If the market is down, it's on sale, and your $100 buys more. If it's up, it buys less. It takes all the emotion out of it. It's like setting your wealth to autoplay. If this is finally making sense and you're feeling more confident, do me a favor and slam that subscribe button. I drop videos like this every week to make money simple. Step 5. Just start. Automate and forget it. This is the most important step. Just start. Pick one or two huge, low-cost index funds like a total stock market ETF, VTI, or an S&P 500 ETF, VOO. Then set up an automatic transfer for $50 or $100 every single month. By automating it, investing stops being a scary choice and becomes a boring habit, just like your Netflix bill. You have to have the right mindset for this, or you will fail. This is not a get-rich-quick scheme. The market will have down years. Think of it like an elevator in a skyscraper that is ultimately going up. Sometimes it will go down a few floors. That's a market dip. It can be scary. But history has proven, again and again and again, that investors who just stay in the elevator and do nothing always win in the long run. The biggest mistake you can possibly make is to panic and jump out of the elevator while it's on a down floor, only to watch it go back up without you. You're a long-term investor. Your strategy is to buy, hold, and let time and compound interest do all the heavy lifting for you. So set up your auto investments and go live your life. That feeling of being stuck doesn't have to be your life. Financial freedom isn't for rich people. It's for anyone who starts small and stays consistent. You now have the why, the what, and the how. This is the roadmap. So I'm challenging you, right now. First, just open an account. You don't even have to put money in it. Just go to Fidelity or Vanguard and see how easy it is. Second, comment below and tell me the one thing that's been stopping you from starting. Let's destroy these excuses as a community. You have the power to change your entire financial future starting today. Thanks for watching. Now go get started.